Hello traders, the title of the video is how to swing trade the ABCD chart pattern like a pro. Alright, let's get started. If you want to know more about the ABCD chart pattern, go to www.stochastic-markd.com. Check out the web pages, ABCD chart pattern, and also the ABCD extension, ABCD pattern extensions. There are two pages at stochastic-markd.com about the ABCD chart pattern. In this tutorial, I want to share with traders, okay, this is a real example, practical example. So you have identified the ABCD chart pattern, you know about the ABCD chart pattern and the extension of the ABCD chart pattern, you know the different types of ABCD chart pattern. Now here you are looking at a real ABCD chart pattern and a real ABCD chart pattern also looking at you, all right? Now you want to swing trade. What do you need to do? How do you swing trade? Okay? So once you identify the pattern, you know that it's A, B, C, D pattern. You say, yes, Joe, I found it. There's one here. There's a high probability that the point D that Joe you always call a delta zone. There's a high chance there will be a profit taken here, and also bearish traders that are watching the bullish trader before will join the bullish traders that are selling for the first time to close their bearish trade, creating what we call a conversion point. So you may say, George, I've done it before, but it didn't work for me. What have I done wrong? How should I handle it? This is it. That's why we are recording this video today. So the first thing, like a pilot will take off. You remember I recorded a video comparing a swing trader to a pilot. We need to do some verification before takeoff. All right. So the ABCD chart pattern is completed. No question about it. It's there. You see kind of resistance going on there. In theory, the distance from A to B is equal to the distance from C to D, but not always, because we have a different type of ABCD chart pattern. All right. So what we need to do is to check other things, go into the mind of other traders. So you see your ABCD chart pattern, what other traders are looking at, what did they see? So now that I apply Fibonacci extension to the move before, you see here, right, went down, pulled back, went back, we formed a significant high before we have that ABCD chart pattern. Area wave trader will say that, okay, George, your ABCD chart pattern, Fibonacci trader, okay? Try to go into the mind of other traders, try to see what other traders are looking at, so you do not miss anything. You saw your ABCD chart pattern, what is going on? Have a consensus, yes or no? Though we have our ABCD chart pattern in a zone of delta, which is the conversion point, we are now at 161.8% Fibonacci extension level of the prior trend. So traders that are following us at Day Pro Trader YouTube channel know that the 161.8% level is what? A breakout zone, that a financial instrument can run away from the 161.8% level. It's a breakout Fibonacci key level. So now we will say, hold on a second. So if we want to sell swing trading because the ABCD chart pattern is completed, we need to be very careful or manage this swing trade carefully. You can see that the first reaction, the trader who sold the dismount, see now they were wondering what's going on. Those are ABCD chart pattern traders. So first reaction, price went down. Next month, price went back up. Now it's stuck above the 161.8% level. So as you can see now, after I have identified my ABCD chart pattern, I try to go into the mind of other traders to see what they are seeing. Have I missed something else? Look carefully, all right? You can draw a trend line. You can put pitchfork tool on your chart. Do all kind of things to, okay, like a pilot, all right, to verify whether this is a real good example of a bearish ABCD chart pattern. But now, after I put my Fibonacci extension on this prior move, I can see that I need to be very careful because the 161.8% Fibonacci extension level is okay, a breakout zone. So in for that reason alone, because of that 161.8% level, though I am ABCD chart pattern itching to sell in the zone, I will say to myself, prior to bullish signal above that critical breakout Fibonacci key level, and prior to bearish signal only below that level. So that orange line will be my warning. Very important. If you are trading the ABCD chart pattern and the pattern is completed, draw a key, that warning line at the point D for delta. I prefer to use the Fibonacci 161.8% level in this case instead of placing it all the way to the top here. So I prefer to use that. I'm using that 161.8% level as my warning line. So now, we will check also technical indicator. The RSI is well overbought. When the RSI is well overbought, it's telling that the bullish momentum is quite strong. So when the RSI, you see where it is now, if the price form a higher low, we will take it. If the price break below, break above a key level and a final support, we should buy because the RSI is at a maximum point. It's bullish. That's why it reaches the maximum point. All right. So now, in order to control the risk, which I talk about in every video, so you may say, Josh, now prove it. We'll use a top-down trading method. So we see our ABCD chart pattern. Next step, you say, Joe, what do you mean by next step? We use a top-down trading method. Here it comes. We go to the signal time frame because our setup is on a monthly chart. This is the zone. And now we are looking for the signal. Is there a signal? If there is no signal, well, we cannot swing trade, isn't it? We cannot swing trade if there's no sharp swing trading signal. So I draw my trend line. I don't want to violate the market pattern on my signal time frame. The price is in a rising, was in a rising channel before. Now here it pop up first time here in that zone where the ABCD chart pattern is completed. It's the first reaction. Trader who sold it first, bring it down. And see the second month it went back up. And now you form a kind of doji on the monthly chart here. So what is happening here? Now it break below it the first time, it went back inside, and then it push it back down again. So we were not the first people to sell. We want to be the second people to sell now. So there is a signal now where on the edge. This is your signal there. So break below, you retest it here. So in order to control that signal again, draw your common trend line. Here it is. Okay, so you say, George, we are still above that 161.8% Fibonacci threshold level. The signal is above it. You say prior to bullish signal above. Can we take this signal? Yes, we can take it because it's a bearish signal. We can take it. But because it's above that warning line, we need to be careful. So don't use too much stop loss. You may ignore it. You can decide not to take it because it's above it and wait for the next signal. But the risk is quite low here because below that channel, you test it here, common straight line on the daily chart couple, the second currency bar is there. So do we sell at this because of the signal? Now we drop down to the hourly time frame to enter the trade. So this exercise allows us to control the risk and to time the market correctly. Another thing that I say to swing trader is better to enter a swing trade on Tuesday instead of Monday, because on Mondays the market will try to readjust itself because of the weekend. So sometimes that can all kind of things can go into your mind. You may say, oh, should I wait till Tuesday or should I enter the trade now? That decision is yours. Sometimes you will have to enter the trade on Monday. If you're happy about it, you enter and you give it a chance, adhering to your own risk control criteria. How risk averse are you? So now we are on the entry time frame, which is the hourly time frame. So you say to me, Joe, you are really, really stupid boy. You want to enter a swing trade on the hourly time frame? Yes, you can because of the setup on a monthly chart. If you do not want to enter the trade on the hourly time frame, well, personally, don't go below the 10-minute time frame, right, or the 15-minute time frame. Right? That's what I will say to you. So this is what we see on the hourly time frame, right, from a gigantic head here. Is this the left hand side shoulder? Or will this stay as, okay, the right hand side shoulder here, and the price continue to go down? So now the best place to place our stop loss will be on the hourly time frame, will be above this declining channel, or best place above this high here. Can you afford that? If you cannot afford it, you have to select another risk entry point. So yes, there is a signal. Can we enter like this? Yes, you can. You can enter like this because this. But you need to here personally. You see, because of this, you see this trend line here. Those who sold it here, those who enter the trade here, this section here on top. I'm talking about this one, this red channel on the hourly time frame. For those who want to enter the trade as like a pro on the, those who sold it here. You see, after this candlestick bar can hide their stop loss above, just there, gently above that red channel. Yes, they could have sold it there. Even here, because it's a declining channel. That red channel is a declining channel. Even after that here, hide your stop loss above the channel. Now, where are we? Okay, we are near the median line of that red channel. So that's what I'm saying to you. It will be better to bring it back to the edge of that declining channel where the risk is low. As always, it's down to your choice, your risk tolerance. Better on the edge of that declining channel, hide the stop loss above it. Right. So this is just to show traders what I've been talking about before, that the trading dream, the setup is ABCD chart pattern. We verify, go into the mind of other traders. We know that we are at 161.8% Fibonacci extension level, which is a breakout point. We don't want to ignore that at all. Here we are, the signal is above the 161.8% level. Now the decision is ours. Should we take that short signal or wait for it to go below that level? If we decide to take it, it's our choice. Take it, control it carefully, use a different time frame trading method. So from the monthly chart, we have the trading setup, the signal will fire on a daily chart, and we are trying to enter on the hourly time frame. But for swing trading, don't go below the 10-minute time frame for the entry. So this will conclude our discussion about how to swing trade ABCD chart pattern like a pro. As always, if you have any question or suggestion, put in the comment section. I always read all the comments, and I really appreciate them very much. All right, some traders are quite interactive, which I prefer. All right, so let us know what you think. Okay, have any suggestion, put it there. And in due course, I will be recording another video to answer your specific question. As always, if you find this video truly useful, let us know by giving us the thumbs up. If you think that, George, you look tired and your voice sounds like a frog, all right, and you have not performed very well, let us know by marking it down, and that will put us under pressure to improve our next recording. However, if you think this is an essential tutorial that will help other swing traders to improve their ABCD chart pattern swing trading, feel free to share with your friend on Google+, on Twitter, and also on Facebook. So this will conclude our discussion today about how to swing trade ABCD chart pattern like a pro. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Happy trading to you all, and speak to you soon.